let me tell you a little bit about what I did this weekend while I was texting you so late on Saturday afternoon and Saturday evening. Was I watched that Frontline video that you had sent me on Brooksley Born. And I remember a large part of that, and I remember. No, I don't. I remember it from a peripheral angle, not in a deep sense, because I was just a new trader when that was going on. Yeah. But I do remember we all, in my mind, I remember having a negative feeling towards Brooksley Born, as if she was trying to step on our toes. And Brooksley Born was the head of the CFTC under President Clinton, and what she was trying to do is she was trying to regulate the CDOs and the synthetic, all the synthetic derivatives, the dark pools that were able to trade unregulated, which got us into this crash of 2008. So that led me down a very late night rabbit hole where I ended up buying and downloading Christopher Whalen's book, Inflated: How Money and Debt Built the American Dream. Are you familiar with that? With Whalen's book, Ira? He really goes through.
Okay. But all right, so let me disabuse you of something really quick, okay?
Please.
Everything now. I was on Brooksley's committee because I was the only Ford trader ever to sit on this committee.
Oh, let me get my notebook.
Oh, get your notebook.
I'm ready.
It was called Barry Lind and I, but Barry represented Clearinghouse. It was called Financial Product Advisory Committee. First, when I got on it in '92, thanks to Toledo Mohammed, who said, you're one of the really good voices. No Ford guy had ever sat on the committee. So first it was chaired by Wendy Graham, Phil Graham's wife. Then, because she was the CFTC chair, then the next chair was Sheila Bair, who was great. I love Sheila Bair, brilliant. So she chaired it. And then when Sheila moved out in like 96, 97, I think, Brooksley took over. So I was on that committee. And I learned a lot. It was phenomenal. But I will tell you this, I was probably the only person sitting there without an ostensible self-interest, because a lot of the committee was made up of lawyers who represented New York banks, and they wanted to make sure they had their fingers in the regulatory pie, so to speak. I was just looking at it from my deep knowledge of currency markets and other markets, and as a foreigner. So when you say she wasn't trying to regulate you, bottom line was, had the over-the-counter derivative market got regulated in a good way, her proposal was phenomenal because there was way too much crap going on. And she knew with the coming repeal of Glass-Steagall, this was going to be very problematic. And how do I know? I was advising her. Mike Greenberger, who was her chief of staff, came out to Chicago. I brought him on the floor. We were together for a full day one day because he wanted to talk and see certain things. It would have benefited the exchange because all that business that would have needed heightened regulation would have going through a central clearing mechanism, which would have not been helpful to what the banks were doing with their lack of transparency. It would have made it far more transparent, and therefore would have lessened the systemic risk. And she knew it. And I had many conversations with Brooke, lots of conversations. And I told her, I said, you're 100% right, but they're going to kill you because you're playing with the lifeblood of Wall Street. The lack of transparency on all these trades was a boom to their bottom line. And Mike Greenberg and I talked about it. I said, she's really, the forces are, and you could read in the papers. I didn't have to know anymore how they were aggregating against her. And she was in disbelief. And the day, this is a true story. So she eventually resigned because once you lose that battle, it made no sense. And she was one of the smartest people I've ever met. She was brilliant and fair. She wasn't, she had really measured this. She was a brilliant attorney and she had measured this. So let's do this right. But they weren't having none of it. And you see I've really locked up with people who've watched this because what's prompted it, we posted it was, I had to listen to everybody tell me about Larry Summers. You know what? He speaks out of too many sides of the mouth and he killed that regulation. So I don't want to talk about regulation today because he was the heavy, because he was a bully, like Tim Geithner was a bully. And that's very well publicized. But Summers bullied. And he bullied her, and you saw it in the congressional testimony. I'm not.
Well, sure.
So the day that long-term capital went under, or had to be worked out, I called her, and we talked. And her first comment to me: "You're the only one who called." This was in the afternoon. Okay, so. I mean, and then the person who comes off terrible is Arthur Levitt, because he was involved in the because I'm going to call it in the language of Clarence Thomas, when he maintained that his was a public lynching.
But what really got me going is I underlined it, and this is just in the preface of the book. In pursuing the American dream today without limitation, we have made our tomorrows less certain. Americans believe that we are somehow exempted from the laws of gravity as regards finance and economics. We speak of our special role in the global economy, even as we repeat the mistakes of Great Britain and Rome in real time. So I thought all of that reading that kind of brought it all together for me in setting the stage for me to go through Whalen's book line by line. It's called Inflated. It's called Inflated: How Money and Debt Built the American Dream.
Yep. I haven't read the book, but I'm a big Chris Whalen fan, so. So that doesn't surprise me because he calls it out too. You know what? And when you said you thought she was trying to regulate you, I said to her, I said, Brooksley, you can read my views and my opinions. And I know she always respected it. I'm a floor guy. I see it because I respect the transparency. We brought the transparency, and that's always been my view, to Wall Street. Wall Street has hated the exchanges.
Yeah.
Because the exchanges brought transparency to where there was none. Before exchange trading, before when they had it locked up, you know what? And right up here, we created the ability to see real pricing in real time and save corporations hundreds of millions of dollars. If you wanted to trade in a foreign exchange, before you could see all of that transparency, there was none. So, and I told her, I said, this is very, I will tell you that as a poor guy, this is self-serving for me because we do it better and we have a clearinghouse. So there's no sticking tickets in the drawer that explode a month later and all of a sudden you got $100 million. You have to settle up every day. So yes, is this self-serving? Yes, but I believe it's good for the system. And so did she. But she always said, you state your self-interest very, very well. And guys at the exchange didn't even know it, because I was on the committee, and yet after every meeting, I would go to Pat Arbor and I would, Jack was already out. So, well, yeah, Jack, and I'd say, look at, or Steve, whoever was chairman, Sanders for some years, and I would tell them what was discussed. I don't know that they were really ever interested. Arbor was kind of interesting because I would go over to the Board of Trade. I didn't have to. He had nothing to do. He wasn't paying my ticket. The CME would pay because I didn't get any money from the CFTC. But I'll tell you what, I was one day when Sheila Bear, we were discussing the bankers trust situation, which they discussed with Gibson greeting cards.
Yeah.
So we were discussing that, and Brooksley wasn't even chair yet. The chairperson was still Sheila Bear. And so, you know, I had delved into it quite a bit besides what they gave me, because there was a lot of public information on it. So I was pretty belligerent during the meeting. And, you know, I don't know who all, there was probably 25 people on the committee. You know, I knew there were a lot of lawyers representing. So I go to get a cup of coffee, and Barry Lind is, you know, chatting with somebody, but within here. And a guy comes up to me. He goes, "How dare you?" In a very belligerent manner. I said, "What do you mean, how dare?" He said, "You don't know that I represent Bankers? You know that I represent," oh, he said, "You know that I represent Bankers Trust. You know that I'm a lawyer, and you're embarrassing my client." I said, "I had no idea who the fuck you represent." And now he's in my face. So I put my coffee down and I said, "You know, let's go outside, because you and I are going to have to," I said, "Don't ever get in my face like that again." I said, "Let's go outside. And you know what? You're a little bigger than me, but we'll resolve this issue." So he looks at me, and Barry's laughing. So when I get back to Chicago, I do a little beat, and I actually have a friend who knew this guy pretty well. So I call him. I said, he was laughing. He goes, "Oh, I'm going to call him." He goes, he says, "Yeah, that's about right." You know, and so, and Sheila came over and said, "What's this all about?" I said, "Forget about it. Doesn't," but the guy was in my face, but it was all public. And I said to him, I said, "Everything I said is public information. It's not like revealed anything that you haven't read in the Wall Street Journal or anywhere else." So it was.
Let me ask you, was the general feeling about that whole, about the CFTC and what they were trying to do, did that echo what New York's, you know, Chicago is a cow town. New York is the center of the world. The CFTC, you know, that little small regulatory agency nobody really knows about. SEC is the big one.
Who's that? Billy WSG? Who is it?
Bill Giles.
Oh,
He's from
yes.
Canada.
Yeah, that's exactly what it comes down to. It still is. All you do is have to watch Santelli versus Leisman. That's CNBC promoting that Chicago's real. What? There's nobody in Chicago who knows anything. You know, Ken Griffin may know because he's a multi-billion, you know, and Sam Zell knows, but otherwise nobody there knows anything. And I've always laughed about it, you know, because that's what you see. That's why they won't give, really, as far as I'm concerned. That's not Rick telling me. I've drawn that because I've been on with him for so long, or I was on for so long with him, and I could see it and hear it in my ears. Finally, they stopped giving me a headset, so I couldn't hear the conversations going on between the director, the producers, and shit, because that stuff plays out, and that's why they set that up like that. They always try to make, you know, Kernan plays with it, but, you know, and Leisman with that smug look, you know, basically, what could you possibly know? Rick knows more than he'll ever forget.
Oh, sure you will.
Get more than Leisman will ever know really about how the markets work. He doesn't care. Oh, yeah. So when you say that, in my opinion, and it's again only my opinion, it's definitely that, and it definitely played out on that committee.
The interconnectedness of everything from the interconnectedness of capital flows and markets in and out constantly, prices changing even when markets are closed, that, you know, the interconnectedness of everything is so very important. Oh, just on a quick side note too, one of the things that made me, that stuck out in my mind is I remember a lot of our guys in Chicago that went to jail, Solly, Flash, other guys, you know, some of the things that went on there was legal in New York. You know, you can trade through, I can be 60 bid on 5,000 shares of Microsoft and they can trade 55 and I'm unable. Chicago, somebody's getting fined and possibly going to jail for that stuff. I don't know, you know, it just hit me when I was going through all of that, but what do you see?
So now you're bringing us to today, because it's still
yes,
what we're watching, right?
Exactly what I was going to do.
Yeah, right. The rules were all, what rules? You know, look at, I was just talking with one of the great traders I know right before that, so I hung up on him because I got to Chucky. who's just,
Oh,
that's enough, no more.
tell
Who's
him I
just-
said hello when you talk to him.
just a phenomenally great trader. Yeah, we were talking about COVID because he's in California. He just got his vaccine too. So we were talking, but I said, Chuck, I was reminding him in May of 1987, and he doesn't remember it, but I had run a nice silver position and I was home because I promised my wife, we just had our fourth daughter. She was born in April, and our fourth child, she was third daughter. And I told her I would stay home. And that was before electronic trading. An operation on the floor. So I had people calling me, and my wife hated it because the phone incessantly rang. And I was running a silver position that had gone up from about $6.50 here. I'll call it up so I can tell you the prices. It was silver at the time. It's a famous story. Okay. I'm going to go to April. Okay. So in April, the market, this was a pretty good move because the silver had been down to $4.50, $5. And we got a move in April from the low was $6.23. It went up to $9.50, $9.80. In the beginning of May, it had a high of $9.50 and a low of $7.33. Well, in that late April, I'm home and I'm running a long silver position, and I had gotten out, and the market continued to rally that day at another $1. So I have 3 other little kids, and so I'm helping the baby, and Chuck and I are talking. I go, shit, as usual, I leave a lot of money on the table. And he says, stop whining. I go, I'm not whining, it's just a fact. So while we're talking, he says, I gotta go. I go, what are you talking about? He said, market just broke. I said, what do you mean? What, it break 20 cents? He says, no, it's breaking, and it's breaking hard. So he got off. That was the time of volume investors. Now, you're too young to know this, but during that time, what happened on the COMEX was the locals had gotten stuck because they were buying on the way down. It was like a $3 a break. They ripped the cards up. They couldn't open for 4 days. Go look it up. They ripped people. I see. I had already was out, so I had my fills. But people who were trying, they didn't get their fills for 4 or 5 days. Everything got guaranteed. Everything cleared, but they couldn't. You didn't know what your position was and the prices you executed at for 4 or 5 days.
How is that? How is that even? How would that even? How could that even? I don't even know how to respond to that. How is that? How does that stand? How does that stand?
And you can ask our buddy Mike about this. So when the FIA conference used to be over at the apparel center, by next to the merchandise market, that's where I used to have lunch every year. So one day they were in town, and Jerry Constant and some others called, let's go over there. So I go over there, I'm with Mikey, and we're walking around, and the CME has a booth, and the CFTC has a booth, and I'm not on the committee yet. So it was before that. And COMEX is there, NYMEX is there. So the CFTC has a booth here, COMEX has a booth here. So I'm walking back, go, hey, come over here. I say to each of them, the CFTC and the COMEX guy, I want to introduce you to each other because evidently you've never met.
That's brilliant.
He's going, stop it. Stop. I'm wearing my coat with my badge on. Are you nuts? I go, well, we know that.
Holy cow, that's brilliant. I know you're witty, but that's a little extra witty. They ripped up their cards. How do you, Ira? How do you see all of this in last week's, gold? This week's gold move, last week's gold move with that other rally on top of it, and then right back down to equilibrium or fair value or whatever the hell you want to define it as. How do you see all of the stuff that we learned? Or that you've experienced from that time coming all the way up through being on the committee under Brooksley, well, first Sheila Barrett, Brooksley Born and everything after 08, 09 headed into now, what are some of the similarities that we're seeing now?
Oh, well, you know, I'm not sure the similarities, like I blogged the other day. So if we're talking about the silver, Bookvar
Yes.
is right about this, as I noted, that a lot, the shorts that they believe are out there are a lot of commercials.
Okay.
People who have legitimate hedges. If you're carrying a lot of inventory of silver, you're a mine, you're a dealer, you've got, you're hedging yourself because these are pretty rich prices, even at
Yeah.
$27, $26. So if you've got shorts on, that's why, you know, I'm not a commitment of trader guy, because there's a lot of things that go into that. There's all types of arbitrage that take place. And if you take the raw data, you're only seeing part of it. I've maintained this for a long time. Commitments to trader are nice, but they're for lazy analysts. That's the way I view it. Okay, yeah, I know. It's a great story. And a lot of times they run them in and they go, and that gives, in their own mind, credibility and credence to it, but I'm not of that. I'm not of that viewpoint, so to speak. Wow, I'm just looking. I put some. I've been away from the silver. You know, as bullish as I was, and I was actually going to sell some calls yesterday because the volatility went up to 90% yesterday, 92% in the March options, silver options. And I was going to sell some, and I said, you know what, this is a little too insane. I'm just trying to understand it. But I actually bought some silver and sold some gold today. I'm actually now in the money. I was stuck some money, but now we're getting we've got a 50-cent bounce here in the silver rate. So we'll keep looking at it. So now when you go back to the hunts, that became a bigger issue. And as I cited in the blog, you know, I look at Mikata Metals. Henry Jarecki was a brilliant guy. And Mikata almost went bankrupt because of what the hunts did. Because again, you had to meet your variation every day. So if you're a dealer and you're short 100 contracts from $20 all the way up to $50, you're running a daily variation. You have to come up with the cash, but you're sitting on a cash hoard that you're not doing anything with. So, and even though you're selling at ridiculous spreads, you're pretty comfortable, the cash is killing you. Does everybody understand how that works for hedgers? Same thing with farmers. You know, if you're running a soybean hedge, that if you've been short, you know, like right now, beans from $11 because, well, my production costs are about $8.50 to $9. I can lock in $11 beans. That's a nice profit, but you have to meet the differential on an everyday basis. Just because you're a hedger, you don't get a pass. You may get a lower margin, but you still have to meet your variation because we settle every day, which was part of my argument with Brooksley. And she was very well aware of it and respected it. That's the whole thing of a central clearing party mechanism. So back when the hunts were doing this, interest rates were approaching double-digit numbers. So the cost of borrowing to keep these positions going was quite expensive. Now, if you're a legitimate hedger, you're borrowing at what? Even if you're paying 3% or 4%, which I doubt, it's negligible, but most of them are paying far less than that. So it's not choking you. So these people, and they don't understand who the shorts are. That's not to say that there's not, you know, traders, speculators out there who are short, but that's not who you're talking about here. And the role of SLV in this changes it dramatically too. Mike Temple and I have been going at this for days and days and days. And it is right. When you buy SLV, you're not buying on margin. Most people aren't. You know what? When the average trade, most people, and I know people who trade, they won't trade the futures, and I don't advise for them to trade the futures. And they're wealthy people, and they'll buy SLV. Well, they're not buying on margin, so they're paying cash. So that is silver, and it's a lien on the silver in the ETF. Is there a shortage of silver? Not in the CME calls, and there won't be until delivery is taken. Because if all of a sudden you're selling 5 million coins a day, 10 million coins a day, because the average person says, hey, I'm gonna buy 100 silver coin. You know, it's a $2,700. Okay, a $4,000 investment, but I like to have them. I can touch them. They're pretty. You know, so they're going to be a head trick. Now all of a sudden, you know, I used to deplore CNBC back in the early aughts when China was becoming such a big story, and they would drag out the idiots who would all talk about, well, if every Chinese just started their day eating one egg, we'd be selling 1 billion more eggs. You know, that was the regular argument with China, that you have 1 billion people consuming now, and it's going to change the dynamic of everything. That was what explained everything. And if you walk down the aisles of Barnes and Noble in the business section, finance section, there'd be 5, 10 books about 1 billion consumers in China. That's what they were selling. So now I'll make the same argument. So if 800 million people in India buy 5 silver coins, it's you know, it's fallacious and ridiculous, but it's got the same stink to it. Now, initially, it has no really effect on the paper silver that exists that we trade, the contracts that we trade at COMEX or on, you know, Globex. The SLV is totally different. That is, they have to go out supposedly, because it's supposedly audited every day. So if there's an incoming, and this is what Mike Temple has been very good at discussing, that if there's 34 million new longs in SLV, I'm exaggerating, but they have to go out and get 34 million ounces of silver to add to the ETF. Today will be interesting, because as much as we've seen a collapse in the futures, tell me what's taken place. Has there been a lot of liquidation in SLV? When I looked at the volume before, it was nowhere near. I'm not sure of yesterday. Hold on. Let me put it up. But
Are they holding on to their SLV positions, their longs?
I'll bet they are, because don't forget, there's no margin there.
Yeah.
Okay, so the volume yesterday was enormous. How much time do we have left? About 15 minutes. Today's volume is less than half at this point in time.
Oh.
Yesterday was 280 million.
Do they publish their open interest
I don't know.
numbers?
They have to by law. It's an ETF, so they do.
Yeah.
And today we've traded, I think, 107 million. That's right. So you're not, you know, as a technical trader, you'd say, well, on a liquidation day, there was a huge correction. And your volume is not greater than yesterday.
That's
correction.
absolutely
right. Is that?
Yeah. It's not a correction. They're holding on and maybe buying more.
Yeah, that's what I want to see. Did they buy more? See, and the CME, it won't become an issue until, again, first notice, because if they need the silver, they'll have to draw it down out of the stockpile. And the CME, and I've checked this, there's a lot, and the CME has been very open about it. There's no secret, you know, how many ounces are in their vaults, and that's not including, you know, so there's a lot of silver around. But if people are aggregating and saying, oh, you know, I'd like to have some of these silver coins, gold's expensive, you know, for the average person. It's very hard to go buy an ounce of gold and sit on it. And of course, these bullion dealers are killing them because they've marked up the premiums 40 to 50%. And I'm serious. I've got 30 or 40 Morgan silver dollars, all rated 62 or higher, which is a pretty good rating, from 1880 to 1890, 90 or 92, that I'd let go for a big price if anybody's looking for Morgans. Got about 50 of them. I've got pieces of 8. I've done a lot of reading. Just by happenstance, the other night I couldn't sleep, so I was going back to some of my books that Fernand Brudel. And silver becomes an interesting story. You know, I've always maintained that when the Chinese go to a precious backed cryptocurrency, it'll be gold and silver.
Yeah. I want to kind of head in that direction too. Okay. But let me just make this point. Ira, if you're selling physical silver, I'm not buying. I'll be looking to sell some too. I'm
You know-
not buying what you're going to sell.
You know, I was on Judd's site this morning. We were talking about, I took delivery of 15 bags of silver coins.
Oh, yeah. I wanted you to tell that story again too.
So-
Thought about that one too. Oh,
So
that's
Judd was
good.
with me. It's 1980.
This is one of the greatest stories ever.
So in fact, Chucky and I were just talking about it because he was laughing. Because when he started trading, that's what he traded, bags of silver coins. 5 bags. So it was $5,000 face value of silver coins. The exchange had a contract, CME had a contract. Never traded, very infrequently. So there was a guy who used to stand down there and try. His pricing was this wide. You literally could drive a truck through it, because he was the only one who would stand there. Nobody else had the patience. It was board traded.
No kidding, still.
Chalkboard. Yeah, into the 80s. So I'm doing something to the currencies, and I see somebody come and put free lot offer in the coins. There was a calculation that I had learned from some bullion dealer. My dad taught it to me. He wasn't a bullion dealer, but my dad was always interested in that. When I was a kid and I had a job, I was 12, 13 years old, and I waited a counter in a delicatessen. I was a cute little kid. The people loved me. They used to let me work the cash register when I was 7 years old making change because I was really good with that type of numbers. I learned how to count by playing cards and shooting dice. My dad was a wise guy, and he would teach me. From the time I was 4 or 5 years old, I literally played poker, and my dad taught me dice. So I would, so I could really do. So I would sit at the register. People would bring their change. Oh, look at this, perfect change. So then when I was 12, they offered me a job. They said, "Oh, come on, we're short. You'll wait the counter. You'll clean the counter. You'll wait the counter." So on a weekend, Saturday, Sunday, I'd work, and I'd work from 7 to 3. And I'd come home with pockets. So, this is the place of coins. And my mother would shake me down when I came in the house because there's days I would have $80 in coins because the place was busy and I was busy. So, my mother used to go through them, taking out the silver coins because in 1964, they stopped making all silver coins. So people were running an arbitrage because the price of silver. So if you could put together $1 of face value, you could probably sell them for $1.80 to $2 because that was the value of the silver. But there was a formula. It was 0.715 because of all the wear and tear on the coins over the time. And so the dealers were fucking you, but that was, it's part of the game. They were doing the smelting and they had to melt them down. So I always paid attention. So he put up and I figure out I go, and he's squeezing the order, he's squeezing to get it at a better price.
Yeah.
So the order filler, okay, cancel that. And right before he was ready to buy him, I shouted, buy him. So I bought the 3 contracts, and believe me, there was a huge edge in them. But I couldn't get out of them. All I could do was sell the Board of Trade silver, and I'd learned that lesson from somebody taught me that you're going to get screwed doing that because you're not a smelter, a fabricator. So he was pissed, the guy who, fuck that. So I took delivery. So I said, fuck it, I'll take delivery. I think the whole cost of it was $30,000, $35,000, whatever. So I talked to a bunch of guys. I said, oh, well, who wants coins? I said, you're buying them below market value, but I said, I've got 15 bags. I'm keeping 3. I'm selling 12. So I had them all consigned out, but I had to go pick them up at Continental Bank because that was the delivery place. You had, so I drive over there. It's across from the Federal Reserve Building on LaSalle Street, right by the Board of Trade. Judd and Jeff Waldman are with me because I need some help. I think we had Judd had an Oldsmobile. And I think we loaded them in the trunk and we're driving back to the CME. But we looked like a lowrider because the trunk was the muffler and tailpipe were dragging down, and sparks are flying out the whole way we're driving over. It was, and then everybody who took them was there to receive their coins. I told them, I said, be here, and it was quite a funny story. I finally sold mine. Sold them. I can tell you the Archie's coins, because that's where it was right by my house. He's in Edgebrook, so I had a good relationship with him because he'd wanted to metals. He was doing a lot of. So I went over there and sold my last. I had 2 bags left, and I sold them in like 2012 when silver was going up. I had held them all that time.
Wow. Nice sale. The perfect sale.
Yeah, Howard Green yelled at me. He says, "What are you doing? They're going higher." I said, "You come here and take them." I said, "I'm going over to Archie's. Bye."
Then I can just see 3 long-haired, young, skinny Jewish kids from the north side of Chicago all piling into the Oldsmobile with the ass hanging on the ground. It just cracks me up.
It was a sight. We didn't even have a security. They didn't even bring a security guard out. They bring a big push cart, 15 bags of silver on it. No security guard. Just somebody from the bank. We're on LaSalle Street.
Did whatever happened to Howard? Do you have any idea what happened to Howard?
No, we haven't talked in, unfortunately, because we were so close, and I have nothing but great things to say about him. One of the greatest technician I've ever known, period, end all. A phenomenally honorable person. I don't know what happened. And you know what? Sometimes life's just too short. So, and we were really close. I mean, my wife used to get pissed at me because there was never a short discussion. It was always an hour, hour and a half. But he worked so hard. I figured I always felt that I owed him, even though I paid him a lot of money. But he worked hard. He was very hard. His business, and he is a phenomenal technician. End of story. Phenomenal.
No, just unbelievable. If the cycle work that he did.
Oh, his work, masterful. Really, that's all I can say. Masterful. And I'm not even doing it justice. And he was that good.
Absolutely. Had I known what I was doing at that point early on in my career when I stepped into the NASDAQ pit, I mean, really, at that point, all you had to do was know how to write numbers on a card. You would make money if you stayed out of your own way. Right. But as Judd and I were working together, and we got to I got to learn more and more about how Judd looked at things and looked at the market and how much that was so heavily influenced by Howard, and then how my own trading was influenced by Howard indirectly and directly through you guys and through him through the years. Is just, it lives on. He lives on. He's still alive, but I mean, everything lives on. I wonder, is he still working at all? Do you know, or is he just kind of drifted off?
I'm telling you, I know. Hold on. I'm just going to. I'm telling you, I have no idea. We have not talked since June of 2012.
He got pissed off at you that you were selling your silver too cheap.
No, I don't know what happened. Oh, no, that's not true. I talked once. My dad died. He called, so we talked then. But no, and it's sad because we had a very deep and long relationship, and he taught me a lot. Phenomenally taught me a lot. Nothing but good things. I have nothing ever bad to say. He's great. So that's where I lie, and he really phenomenal. The best I've ever seen. End of story. I don't mean to demean anybody else, but he was phenomenal. He probably still is phenomenal. Yeah,
no doubt. All right, I want to circle back into when you had mentioned something about China and the possibility, whether or not they are asset backing their currency in some way, shape, or form down the road. But Mark Wisniewski, Mark, I don't know, Wiz, if you're still here. Mark had a question.
Sure.
Yeah.
All right, go ahead, Mark. Just go ahead and ask Ira, because this is right along the lines of what
Hey, Ira, how you doing?
Good, Mark. How you doing?
Good. Hey, yeah, so quick question. In your opinion, do you feel the US government would ever create a new digital currency to replace the dollar, and possibly manufacture strategy to reduce the overall US debt with some type of transition um, away and out of the debt with some type of digital currency, given that there would potentially be, we had talked about it and it's been thrown around that, possibly the only way to get out of this debt or balance the budget would be potentially switching over to some type of digital currency. I don't know what your opinions or thoughts are on that.
I'm going to give you a much shorter answer than this really deserves, because I mean, we could sit for 4 hours and discuss this. So, okay. I believe that they're going to go to a digital currency, although I believe also it was Powell who, in answer to that, oh, no, it wasn't. I'm sorry. It was somebody out of Europe. Was it Europe when they talked about this question? And there would still be a role for currency. Was it here? I'm getting confused, but I believe you're going to see it because the academic literature is pointing to it. And we can argue that a debit card is really an electronic currency, right?
Yeah.
How the money gets on there, but and now that bothers me. And what scares me about it, and I've read the academic literature pushing for this, they do it under a veil of, well, it'll cut down a lot on crime because so much of crime is financed by cash, and this will be able. Well, you know what? I'm a libertarian. I'm willing to put up with the crime, but I want to be able to have control over my finances. And my attitude is, if they go to electronic, you're going to lose control, because what the primary premise will be is that they can take interest rates -5% when it's electronic currency, and you can't stuff an electronic currency under your mattress, right?
Yep.
And that's what we find when they take interest rates too low, money stops circulating because people start hoarding it. Because why am I going to put it in the bank? The only ones who really create, there are non-bank banks, as we call them, or the what's the word I'm looking for? The non-banks. It's shadow banking area, who will lend money, but that's what happens. And you see all the money that makes its way onto reserves at the Federal Reserve, and that's what they're crying about. That's why, that's what the money technicians will tell you. I'm not talking about technicians, chartists, money technicians, that there's no velocity to it. And with no velocity, that's why you don't get the inflation that they keep preaching about. So if you went to electronic money, they would force rates so low that you would have to spend that money to create the systemic demand that they're craving. They don't want it sitting there. The longer it sits there, when the savings rate jumped 36% in the second quarter of 2020, they were scared out of their minds, because that's exactly what they didn't want. They needed spending to get the economy going, not more saving. So my opposition to negative currency, to electronic currencies like that, is that they'll take interest rates to -5%. So you go, well, shit, I have to go spend whether I want it or not, because the penalty for not doing it is too great. So I'm opposed to it, but are we going to get some type of central bank fiat cryptocurrencies around the world? Yes, there's too much work going into it. And that's why I think that when the Chinese do it, because they're going to do it and try to replace that on an international basis. So they have an opposition to the U.S. role of reserve currency. But initially, I think they're going to have to do it with precious metals, some piece of it, whether, hey, I got a Chinese crypto. Hold on one second. I got to say okay, honey, play well. Enjoy. So I think that they're going to have to wait to buffer it up to get global acceptance. And then, once it's, then I'll be able to pull back. But I think that's one of the reasons that the Russians are doing the same thing, because you will see it, and it will make a differentiation compared to the fiat currencies of the Western world. They're looking to displace, and that's not I'm not being controversial. I think it's a mistake. I believe much more in Graham Allison's view of the Thucydides trap. I think that countries who are coming down from their power base on a global basis, or whatever the global situation is, whether it's Greece, in the time of Athens and Sparta, which is where that comes from, that the world does better when room is made and you tolerate many spheres of influence, and not necessarily in a confrontational manner. And that's not the point that the United States, the United States can be confrontational, and the Chinese can certainly be confrontational, no matter what Xi says at Davos. That brought a laugh from anybody who had any credibility. We're going to see it, and it's going to be done in the West to the ability to control your money, because they don't.
Right.
That's the whole basis of Keynes. Keynes' paradox of thrift, that when times are bad, because that was always Ricardian equivalence. And I'm sorry to get pedantic, and I will water this down, trust me, but there's really no easier way to explain it. But in Ricardian economics, when things get hard, when people have a tendency to save, and that's what Keynes was answering. Not only that, but when taxes go up, it will slow the economy going forward, because people know they have to pay higher taxes, and they start already stashing away money to meet what they know is coming at them. So there's a lot of elements in play. But when the Fed looks at everything that they've done and tries to answer to it, because everybody keeps going, as all the wise guys on CNBC, well, where's the inflation? There's no velocity to the money. And that's the velocity. So that's what they've brought into Rogoff, Summers. Krugman is more interesting. And I like Krugman as an economist. I just hate him as a political commentator. And when he sticks to his economics, he's really good. But they're all dealing with how do you get this money circulating in the system to get the type of robustness that they want. And that's why this keeps rising. They like to hide behind, well, this will end the criminal element. But you know what? So much of that criminal element is at the lower ends of the economic ladder. And these people need that edge, by the way. I'm not opposed, people who get paid in cash, it's not such a terrible thing. But why is it there's everybody else is feeding at the goddamn trough, as we're seeing this week, Wall Street, they can't wait to cry. Everybody gets something, right? Military industrial corporations, everybody feeds at the government. So what if the people at the lower end who deal in a more black market, so what if they have a little edge? Why would you take that away from them?
That's a great point.
So do you think they'll try, the U.S. government will try to make a play with potentially refinancing some of this debt if they're able to then potentially view taking rates negative?
That's a very good question. I would say yes. That's why I think we're going to see yield curve control. And that's why I also think Jay Powell, which after his last press conference, he should have resigned anyway because it was so pathetic. You have no exit strategy. Everything he said to me was, really? This is pathetic. And the thing that really bothered me is that Jay Powell, the chair of the Fed, said in an answer to Steve Leisman's question, real unemployment is 10%. And yet, because everybody has their, they don't listen. The media, that should have been the headlines. Anybody who is an anti-Trump person should have been absolutely blowing this up. Real unemployment. This is why Biden got elected. This is why we're going to get in a very aggressive Fed. But that doesn't answer your question. But I believe your answer will come when we see the Fed engage with the Treasury yield curve control, where they they prevent long-term yields from rising, because it will be very difficult for the government and will lead to exactly what you're talking about. Because if interest rates, right now, the market can push the 10 and 30-year yields higher, as we see with the bond futures all the time. But my question to Powell would be, what is the make or break level where do 30-year yields have to go before the Fed says that's enough and we're coming in and preventing the rise? This was the issue that Louis Gavet and I discussed with Benugli on the financial repression, because originally Louis Gavet thought the 10-year could go to 2%. But after what he saw the Fed do in December, he's now convinced that they already started on yield curve control. I'm not sure, as certain as he is, but I said in the blog, in answer to his 2% before him and I did the podcast, I thought 1.25 would be the break point. He says, I think it's lower now. So we will get our answer.
What does that do to, oh my gosh.
Can I call you Wiz?
Yes, sir.
Okay.
That's what I normally go by.
So Wiz, before we will get our answer, because it will be revealed. And that's why I thought Powell would leave, and the person who they would put in would be Lael Brainerd as a Fed chair, because she's been a big proponent of yield curve control, because it's really a political issue. And it means that the Fed will be financing or aiding and abetting the financing of government debt by preventing yields from rising. So we won't quite get to any type of debt default or restructuring. There's a lot of ways, but the debt does matter. That's where I break with them. Well, several areas with the MMT crowd. Debt does matter until proven otherwise, but historically, that has always mattered. But that's why they want inflation, by the way. They'll tell you but it's to ease the burden of debt, because nothing eases the burden of debt better than inflation, and nothing makes it more severe than the onset of deflation. And that's why when people make the comparison to Japan and the US, I think it's such a false comparison, but we have to deal with it because they control the airwaves.
Yeah, and that leads to another topic for another day, but the overall rise in commodity prices, what Goldman says is the positive feedback loop. A weaker dollar enforces higher commodity prices reinforces a lower dollar. And then, there you get your commodity inflation there, which kind of affects a whole gamut of things.
Absolutely right. And I don't per se know how to answer that. I don't know if anybody does. And Goldman, but it's part of the problem. And now I hear people out there, they're going to sue. Here, CNBC had that woman on from Manulife talking about a possible squeeze on dollar shorts. You know what? I don't believe it, because if you saw the Fed open up those swap lines quickly, the world right now, because there's just not enough global growth, cannot take a stronger dollar. In today's move, and okay, the dollar index is back to 91. Yeah, okay. It's just a correction. We know the market's correct. It was too much, too fast. But that chart, there's no dollar. First of all, as I noted on Sunday's blog, the Russian central bank now has more in gold assets than they do in dollar assets.
Yeah.
Talked about that last week. That I don't even begin to understand the implications, the long-term implications for the U.S. for the dollar and oh my gosh, what are some of the implications of that, of Russia owning more silver and metals than they do dollars?
We don't know that they're gold. And this year, see, it's interesting. Gold has kind of, but if we go back, all right, hold on. I gotta go to the charts. I'm like a weatherman right now. Hold on. Hold on. Let's go look at the chart. I'm gonna look at the gold. Okay, so if I go back to the gold, at the onset of COVID, before we had that huge break, the gold had a high of 1704, and then after it corrected, so we had 1770. So the 1770 to 1780 area seems to want to be support here, I think, on a longer term basis. Now, the Russians have said that they have not been buyers of gold for probably the last 15 months or so, or no, 12 months. And they've been allowing their gold mining, which they do a lot of, to be sold because they were trying to earn foreign exchange. So they haven't been adding. So whatever gain in gold in the Russian treasury has come organically through higher prices. Okay, and yet we're still higher than that previous high before the onset of COVID. That's why I wanted to go look there. So even without the Russian central bank, so there's buyers of gold out there. And all they're doing is to protect against everything that you're talking about, Wiz, and everything we've talked about. You know, the fiat currencies. You know, it's like people say, oh, you're a gold bull. I'm not a gold bull. Never been a gold bull. But I'm not a fiat currency bull either. And it's always excused upon the flip side of the coin. We'll see the way this plays out. And everybody who thinks that they know the answer, God bless. I'm never so sure. My view about owning gold is it's not because of the inflation. By then it's too late to be buying it. It's because central banks, to me, it's about central bank credibility. And every day that central bank credibility is diminished, gold increases in value. That's my only stance.
Excellent. Thank you, Ira.
Because, you know, I can crush gold any day. And I said, when real yields go to 0 to 1%, real yields, meaning, so if inflation was a 0.5% on an annualized basis and interest rates were 1.5%, I guarantee you gold will be back to 1,300, 1,250, because it really is, because then it would appear that the central banks have regained some credibility. But as long as real yields are preponderantly negative all over the world, and I'm not talking about the 30-year. 30-year does not direct the show, although right now it is because the algos are using that as their fulcrum, as their lever on the world. But it's not, that's not where it gets made at. It's always on the short end. And that's why when we talk about the cost of carry, back when the Hunts did this, the Fed was busy raising rates to squeeze inflation out of the system. Right now, there's no sense of raising rates. And to quote Jerome Powell, lower for longer. And we will stay lower because real unemployment is 10%.
With 1.4% inflation. Oh my God. I brought up a question, but I lost the train of, I lost it.
That's right. Go ahead.
Robert, did you have anything that you wanted to ask? I know we were talking earlier, Robert Seco. I don't know if he's still around.
You had to go milk the cows.
Oh, yes, I am. Yes,
Oh.
I am.
I thought you were out milking the cows. Yeah.
Was just about to. No, Ira. Nothing comes to my mind at the moment. You've already spoke about silver. I was just curious, how did you see this? Is this just a temporary spike, or? But you've answered this already at length. So no, thank you very much. I don't have a position. I was just more curious. I missed the platinum trade on Sunday night. I was doubting Thomas. No, I just had my index finger right on the keyboard, and I froze a little. I wasn't sure. I saw it was stabilizing around 1094 for 2, 3, 5 minutes, and I said, I'll wait till it closes the gap. Well, it never closed the gap, opening gap. Didn't even get to the half of it. So Anyhow,
Rob,
I know, enjoy the conversation, and
no,
at the moment, I don't have any more questions.
because I was doing the same thing, I bought it at 1092 and a half, 1093, 1093 and a half, and it's still, so I sold out half of what I bought at like 1096. I thought it would be really shooting.
Oh.
But it was still a good trade for me. Not that I made a lot of money, I didn't, but I did, it was and I treated it as a trade. So I was probably, getting out of the rest of it between 1022 and all the way up to 1039 or 1139. I'm sorry, from 1122 to 11. But today I'm buying it back, and I'm only using it as the gold spreads, because if this demand situation is what's really driving these markets, then it should work. But I'm not putting it on big enough to hurt myself in order to make a lot of money. I'm playing here because I want to see, especially as I talked about, which was kind of interesting, on the 200-month gold silver came in at 65 and change, 65.22 or something, which we melted through there on Sunday night.
Yes.
So it prevented me from really doing anything. It was so fast. But now we went back, and actually the gold silver ratio, which is all I was watching today, outside of some platinum later, went actually higher on the week. So I said, okay, you know what? Here I'm going to put it on, and I'll test the waters, because because if this demand story on silver is right,
Yes.
about that there is, and this is where SLV is going to conflict with the silver contract, that we trade on Globex or wherever else you trade it, but on the COMEX, then this is going to be interesting, because SLV, again, that's a non-margin. So what are you going to do? You can't raise margins. All you can do is what those idiots at Robinhood did, which signaled that there was a crisis coming, because as soon as they said you can't own more than 5 SLV, well, wait a minute, I'll just go somewhere else where I can buy all I can. And the bigger people who were trading everywhere else, I know people who bought, I know a guy where I live, he's very successful in life. I think he bought 50,000 SLV. So what difference, Robinhood? Okay, so all you were doing was harming the littler person. Then they were forced to go looking for other platforms to trade on. But you didn't stem the real demand if the demand is genuine. And right now, okay, it's genuine until proven wrong. And now you're butting heads between SLV and the futures contract right now. The futures contract, again, let's see what happens when first notice date and delivery start to take place. Think back to last March and April with the gold situation. Remember when the craziness erupted?
Yes.
Okay, so we're going to watch. This may all be to quote Shakespeare, a tempest in a teapot. But if the demand story is right, then a huge drawdown in CME inventory. But we've got, 25 days, I think, 24 days, whatever, until we see. Those aren't trading days, but those are calendar days. But we'll see. We'll see.
Yes. Ira, following up on our earlier conversation, outside of this room, you've asked for if it's true that the bins are empty. I did 2 more calls, follow-up calls with farmers I know, and the best sale was 1140. That's the farmer who sold the last of his beans. It's the guy from Kansas, and he says, Robert, I have no more, and I will plant a lot more this year. So that confirms you might be onto something. So far, based on the 2 additional calls, people actually sold. Yes, those who held off, and some of them sold as early as upper nines, not even double digits. But the last guys I spoke with, the best price they sold, the rest of the beans was 1140.
Yeah, and thank you, Robert, because that's very interesting. But there has to be a reason why the Chinese are busy buying, and it's China bound. There's no question. So much of the grain, and so that means there's no protection against drought in the U.S. this year. right?
Right, right. Although just
Okay.
lately, looking through the window, we had a nice rainfall for 2, 3 days. All
Yeah.
farmland through Nebraska, Iowa is actually moist. The danger is it does not have a snow cap, snow
Yeah.
coverage. That usually hurts the wheat, not soybeans, because there's no soybeans now, but the winter wheat,
Right.
if we would have really a frost around 0 and we don't have a snow, sometimes it actually diminishes the yield if it lasts. It hurts wheat that way. But soybeans so far, it's too early to say how the spring will be, but the planting season, everyone I knew, they upgraded their equipment, better planters, they spent money on the upgrades of the old equipment. They want to plant fast and as much as possible because now they see the pricing.
Well, we'll see, because I know you've talked about it and you've been, you're such a great, I hope people in this room realize what a great resource you are. But that Brazil is going to bring in a sizable crop because they were making, we know that beans were at record prices in terms of real all last year.
Yes.
I kept writing about it and it was factual. So they planted a lot of beans. Let's see if prices really stabilize to me between 12, 12.20, 12.50. I think that'll signify be very careful because that means that the Brazilian beans do not even have a huge crop, isn't pushing the market back down to last year, what were we at? $9.50, $9, $9.50,
Yes.
$10. If we can't visit those with a phenomenal Argentinian and Brazilian crop, be very careful here because there's no protection against drought this summer in the US. And there are certain weather forecasters, with sunspots who are calling for drought. And that's what may be propelling the massive Chinese buying, especially because the yuan is so strong. I've been beating the drums about that. Pay attention to that because the Chinese were squeezing liquidity with the currency phenomenally strong. And I'm not talking about day-to-day movements. I'm so far beyond that, but certainly a lot of things moving here. This is going to be a phenomenally volatile year. The one thing nobody's talked about is what's going on with these risk parity traders, because they're usually short vol as part of their strategy.
Yeah.
Oh, yeah. That's the new, isn't that being rumored to be the next target of the Reddit crowd, Wall Street bet crowd?
I don't know. Go to those websites. So I get a lot of email. There's so many people read my blog and like rooms like yours and Judd's. So I get emails all the time. So I get whacked in the head if I'm not paying attention to somebody, which I really appreciate. It's one of the wonderful unintended outcomes of all my work in regards to this. So really good. So you bring up a very good point. We shall see, because it now gets interesting.
I was going to jump in here on these beans, and just I want to say too, it's an honor to talk to you, Ira. This is Jake, and I actually farm here in Iowa too, and something I wanted to point out, a few things that are going on in the market right now. So when it goes to crop insurance, that's where most U.S. farmers set their base for what they can guarantee for the year as far as the floor in beans or whatever. That just started tracking here on Monday. That'll track from the 1st of February through the last trading day of February off the November futures. So that's gonna have an effect on how much beans are planted to somewhat of a degree as well.
Right. Oh, Jake, how many acres are you?
Yeah, so I just farm the family ground now, which is right around 1,000 acres is what I farm myself in west central Iowa, half corn, half beans. Subsoil moisture, we had the driest fall that I can ever remember. and we haven't gotten a lot of moisture since. I mean, we've had a little bit of rain here and things froze good, which is all right. But Robert's right too. We have not had much snow at all this year, which is fine. I mean, one rainstorm can take care of that in the spring, because they generally say a foot of snow amounts to an inch of rain, and generally after that first foot of snow, everything else winds up in the rivers and the ditches anyways. So if that helps at all or puts anything in perspective.
Well, have you bought new equipment this year?
I tell you, the last couple months, I've been buying and selling a lot of equipment. I've kind of been in the equipment market, just like we trade in here. So I've actually been really busy with that. But I haven't gone and bought more than what I've normally had. But I've traded up, so to speak, and then I've just been selling it too all along. So.
Yeah.
But yeah, there's a lot of equipment buying going on. That market is hot right now. And it's, from what stuff was bringing back in July, you can't find it now. You can't get it bought, and it's way higher priced, if that makes any sense. So there's a lot of renewed optimism in the ag world right now.
That's phenomenal. Matt?
Yeah,
Work it out with him. I think we should hold a symposium on his farm one day.
I'd love to. I'd love to.
Where is it at? You're in central Iowa?
Yeah, west central Iowa. So I actually live on the western edge of Iowa, and then the family farm's about 60 miles to the east. So I live just a few miles away from the Iowa-Nebraska border here.
Are you a cyclone?
No, I couldn't. I don't follow any of the sports, quite honestly.
No, did you go to college? Did you go to university though?
Nope, school hard knocks. Right to the field. High school, right to the field. My wife's a Husker fan, but right in the neighborhood I live in, it's about half and half because we're so close to Nebraska. So
Right. So so is it Iowa, not Iowa State?
as far as what people like as far as ball teams out here?
Yeah, school.
Yeah, it's kind of a mixed bag. I've got friends that are fans of both. I've got friends that have gone to both universities. I've got three sisters that all went to the University of Iowa, and I've got a brother that went to Iowa State. But I never have liked the University of Iowa, but I'm kind of biased because I had to help every sister move to college, and it was about a 4-hour round trip, or 4-hour trip away. So that's my only reasoning there.
I was always a Luda Olson fan. But you know what? I used to like to watch the Iowa State Cyclones because there was a kid we used to play on the playgrounds with who played there, Sam Hill. I was already older, but he went to Iowa State. We actually had a good from Amundsen High School.
Very good.
Nope. And no, although I just watched I beat Iowa the other night, so tip our hat to that. Oh, that'd be, see, Matt, that would be great. Like do this on a real, say, because first off, my hat's off to you, and I say this to Robert, and whenever I talk to Rob, I tell you, if I wasn't doing this, if I wasn't a desk jockey, even though I'm really not, I'd be a farmer. I know it's hard ass work, but that's okay. My parents raised me to work hard. And
I've got something else you find kind of interesting too, Ira. So in the last 3-4 months, the price of land has really gone up, and it's been a really strong market here lately. And what I always come back to, or what I sit here and think is, is the money kind of rolling towards that because people can hold on to it and appreciate every year, and they want, is it a hedge against something? Is it where the real money is kind of the real I don't want to say inflation. I know that's not quite right to say that, but do they think that'll stay better with the rise in everything that's going on? And it's been really surprising because I mean, I would say there was a lot of stuff that was off the market and a lot of no sales here 6 months ago. And now ground is bringing, on the low end 12 and on the high end $15,000 an acre here.
Wow.
And
With water, Jake?
what's that?
With water? With water
No.
on the ground or dry land?
We're all dry land here, but the weather we have in Iowa, generally you can grow crop by accident.
You don't need pivots.
No, not too often. And the only thing that's irrigated out here is some of the tougher dirt.
That
But,
is amazing, because I was just telling Ira this early morning, Keokuk area, East Iowa, was $12,000 in 2013-14. And I had some friends who were saying, we are just millionaires.
Oh, yeah.
No, it was just shocking to see that price, and it came back now to these levels. Look at this, even in Western Iowa.
Yeah, and the supply isn't there, and you go into even northwest Iowa where there's a lot of dairies. So they've got Blue Bunny dairy up there in Lamar's, and there's a lot of dairies and there's a lot of cattle feeders up there in the northwest corner of Iowa. In that ground, some of that's bringing 18, but that is just a hard market. But
Yes, and I said that the guys were saying they're millionaires. Guess what? Jerry, my buddy, he hasn't sold even a square foot.
Well,
He
that's the
holds on to
problem.
it, and he says he will sell, his kids or grandkids will sell, but he's not gonna sell anything until he dies.
Yeah, but there you go again, though. They're millionaires only if they sell it. If you're not selling it, it's just a store of.
No, these guys they have a specific lifestyle, and they're not into this for the money. They just genuinely grew up on it, and they love this lifestyle, and they will never part with it. They would move to city, they would just perish.
Sure. No, I understand that. I can totally get that.
So, it's funny because, Jake, I know you'll appreciate this. In 2004, 2005, when I did a lot of research and work into the coming ethanol situation and what it would take, I said, so Matt, I had talked to Howard because he lives in Valpo. So we went driving around in Northwest Indiana looking for farms to buy because there was a lot of farms. They were enticed, of course, by the housing boom that was going on. So developers were paying $500, $5,500 for high quality land in Northwest Indiana. And to do ethanol, so you had to be close to a railhead or at least have cheaper trucking transportation. There's no pipelining ethanol, it's too corrosive. So we were driving around in all these small areas, and we had a realtor who we were working with who worked with the farmers. And my attitude was, hey, if I buy the land and I can put together a consortium of buyers, I was trying to make deals because the farmers, I sat with farmers. We'd meet, have coffee. I wasn't trying to poach land. It was all people who already had their farms on the market.
Sure. Yeah. Yep.
The problem was we were having to bid against the developers who wanted the raw land. And that made it untenable because it was hard to get a return because the most you could lease it back was like $1 an acre, maybe 75. And there just was up, but corn prices were probably $2.80 to $3 at the time. And being
Yeah.
$7.50, $8. So we were looking. So I hit on an idea and I said to the farmers, I said, sell us the land and you can still farm it. And here's the deal, that if corn prices go to $3.20, you're in for 10% of the gain. If they go to $3.40, you get 20% from that on. And at $4, you're in for 50% of the profit. And they go, why do you think prices are? I said, well, because this ethanol deal, you're going to screw with the food chain. This is going to drive grain prices higher. And I had learned a lot about distillers grain. So I know you don't lose it all in the process. So
Right.
I talked myself out of every farm sale because they go, well, if you're so right, I'm not going to sell the goddamn land.
That's awesome.
Howard would say, why don't you shut up? We can't get anything done. I said, because I'm trying to do this in the most righteous way. I'm not, if they still want to farm, then they can get rid of the land, get cashed out, and they'll still partake in it. I said, I think it's a pretty good deal. And so did they. And they said, oh, fuck it, I'm not selling that.
You were too transparent, and then you got
You know
too
what?
hard.
You know what? It was because I went in respecting them so much. And I know farmers are their own worst enemy. They always borrow too much money. They always think that, I understand Texas hedge. Hey, did you hedge your beans? No, I'm long beans. I said, but you've got 3,000 bushels.
No, I get where you're coming from. That's great. It's
They're always, people taught me long ago, they always get themselves in trouble.
it's the nature of the beast.
Yeah, but good. Matt, that's definitely a project for you.
Oh, we'll get it done. We'll get it done very quickly, Jake. As soon as that weather breaks, we'll be up and put a tent up, get a band.
Hey, you know what? I've made that drive because I used to drive down 70 when I would come from Colorado. I'd go through Nebraska, through Iowa, all the IBP feedlots,
Oh yeah.
right?
So I'm about 40 minutes north of Omaha and about 30 minutes south of Sioux City is where I live. So
It actually, though, it was really good driving trips because it got me along Iowa beef processors. I said, they're consolidating, but somebody's going to buy them out. And that became a shit show because Bruce Johnson was a very good friend of mine, who's a
Great trader.
great trader, hog and cattle trader knows. So I went to Bruce. I said, Bruce, why don't we raise money and buy IBP? He says, they ain't going to want to hear from you. Those are some mean son of a bitches. And you don't want to deal with them. But they got bought out. And I actually made some money. By the time the courts were done resolving all the issues, Bruce turned out to be 100% right. And he got long too, but we didn't have to deal with them. They were some nasty guys. And Bruce told me that. He said, great idea. Forget about it.
They ought to send you a holiday card every year, thanking you.
I mean, to me, I would see, because you could see how the mom and pop feedlots were all being consolidated. Everything became IBP. Iowa was Iowa beef processor. No question.
Iowa pork.
Yeah. Now, do you have, I was going to ask you, do you have hogs?
No, I don't. Never did have any livestock, but I've been around it.
Yeah.
Kind of, that's a whole nother situation. It's kind of gotten chased out of Iowa with the DNR in the last decade or so with our positive moisture every year. And a lot more stuff has gone to Nebraska and Southwest Kansas, where they don't have to deal with the excess moisture on the manure management side of things so much. So it's, it's still here, but it just got so expensive for anybody that had over 1,000 head to make this huge investment to keep going. A lot of people just kind of hung it up, So, for example, the county I'm in, there's only 10,000 population in this whole county, and there used to be probably 40,000 head, a handful of different feed yards in this county. There's none left, just within the last 2 decades.
Yeah, it's a wealth of information that we don't get to see. I really appreciate it because this stuff fascinating. Really, the ethanol issue. I looked at ethanol bills one after another because I said, well, I can't get the land because we couldn't outbid the developers, especially if you were going to be close enough to where you could get the ethanol to where it needed to get to. And we figured with whiting and it was really ideal to be in Northwest Indiana. I talked myself out of every good farm deal.
It cracks me up.
But that's all right. I learned a lot. And you know what? It was really good sitting and, talking to guys who really got their hands in the dirt and them giving you perspective, And again, the government will come in and screw it up anyway because.
What they do. I appreciate you taking the time to talk with me today, Ira.
Thank you. Yeah, I get more than I give, so I really appreciate it. Matt, you got anything else that we should?
No, Ira, great conversation. There's a lot more that we can get to and sometime later on in the week, but there's just so many things going on and so many different things pushing and pulling. And I do want to kind of get into a little bit more of a conversation about capital flows and the way that capital flows have changed since, my gosh, since the 90s going into the crisis of 08. We got a lot of questions.
Yeah, well, that's such an important question because, that's everything that's going on right now.
Mhm.
And it is changing. But again, it's the impact of central banks with money being so ridiculously priced for them to stimulate whatever they're trying, they're trying to stimulate 2% inflation. But everybody should always ask themselves, because even Paul Volcker, they live off of Volcker, because when they talk about, well, if inflation were to really speed up here, we can always deal with that. Well, can you? If real unemployment is 10%, and again, the question I've been asking for how long, it's almost probably 10 months anyway, because if unemployment is that high and inflation goes to 6%, they have a dual mandate, but they've already consigned themselves to deal with bringing minority unemployment down especially. And that's the fact we're talking about. So there's a lot of questions that remain. And they say, well, we're not worried about inflation because we can crush inflation. And yes, that's the asymmetric nature of central banking that Paul Volcker revealed to everybody. You can raise, but it actually goes back in economic, you go back to the 30s during the Great Depression, my favorite economist of all time, Joseph Schumpeter, talked about it, this whole concept of pushing on a string, which I can get people to stop borrowing and I can slow an economy by raising rates. There is no way that I can take rates low enough where I can generate growth, because if what Schumpeter would speak in terms of entrepreneurs, capitalists can't make a return, why should I borrow money at zero? If I can't make a decent return, there's no incentive. Why am I borrowing? And that's what these economists can't come to terms with.
It's a lot to chew on and a lot to look at and a lot to think about. And I can't wait to get into more of Wayland's writings.
Yeah, thank you. I'm sorry we could have gotten out a little ahead this morning, but we're good. I hope you're feeling well. I hope your family's well. I hope everybody's well. And we will get to this more and more.
Yeah, thanks, Harry. I'll keep you updated on everything else. And thank you so much. I'll talk later on in the week.